What's up, guys? Welcome back to the channel. It's Tristan with the Pearrow Group, and this may very well be the most helpful video that I've ever made, in my own opinion, because this is what I spend a lot of my time coaching and counseling my clients on who don't qualify or who don't qualify for as much as soon as they would like to. So what I'm going to teach you guys today are 11 little known ways that you can show more income on paper right now to qualify for a mortgage. Not wait 2 years, not wait 3 years, or even 1 year. Right now, you can show more income, either increase your purchase price or just get qualified in general. So let's dive in. And the number one thing that you can do to show more income to qualify for a mortgage is to ask your boss for a raise. A lot of people don't think of this, or they don't really know that it's possible, but you could go get a raise right now and come back to me with your new pay stub, and we could use that income. So if you've gone and you've tried to get a mortgage and you didn't qualify for enough, or you didn't qualify at all, go ask if you can get a raise. Go ask if you qualify for a raise, or maybe it's time for you to get one. And hey, you may be able to show more income right now. Number two, kind of along the same lines as get a raise, is get a higher paying job or a higher paying position. Most people don't realize they can get this either. They think if they're trying to buy a home, they need to stay at the job that they're at. And that is absolutely not true at all. Now, what you don't want to do when getting a new job is go from being a W-2 employee to a 1099 employee. Because in the eyes of a lender, a 1099 employee is self-employed, which means that you just fell into the category of being a business person or a self-employed person, which means you would then have to go and wait 2 years for that 2-year analysis of your income to be able to qualify with a 1099 for a more conventional type of loan. Now, if you were going for an alternative type of financing, you may be able to qualify with 1 year of 1099s. You are not going to get very good terms. So steer clear of changing to a 1099 position from a W-2 position. Other than that, you're fine. You can absolutely change from a W-2 position to a new W-2 position that is paying you more money, and you can go ahead and just the same thing, bring those new pay stubs to your lender, and we could use that income right away. The third way that you can show more income on paper is a bank statement loan. Now, this won't apply to everyone, but for some people, they're making more money into their accounts than they're actually able to get qualified for. And this is usually people who run their own business. So let's say that you run your own business and your accountant did your taxes and they claimed X amount of income. But realistically, what was deposited into your bank account as a business owner was more than what your accountant claimed due to write-offs and things of that nature. To qualify for Morehouse or A House, you can do what's called a bank statement loan. This is not a conventional loan. It's a different type of loan, so they're not going to go by your tax returns or your W-2 or your 1099. They're just going to look at what was deposited into your bank account, do an expense ratio on your business, and then they're just going to give you that income as your income to qualify for a house. So if you weren't able to qualify as a business person, a 1099 person, or a self-employed person for a home, or you weren't able to qualify for as much home as you want, a bank statement loan may be the way that you can increase your income on paper to qualify. Number four is pay off your debts. If you can't qualify now, it could very well be your debt to income ratio that's holding you back. You're obviously going to want to make sure that this is the case with your lender, but your debts are directly taking away from your income on paper in the eyes of a lender. So if you've got a car payment and several credit card payments and a few other payments that you're paying out every month, that's taking away from the income that could be counting towards your home. So you go pay off those debts, your debt to income ratio will drop, more of that income can be allocated towards owning and buying a house. Number five, add a co-signer or a co-borrower. So you're trying to qualify for a home, you don't make enough income to qualify, you can bring on what's called a co-signer or a co-borrower onto that mortgage. They don't have to live in the home, they just have to have the credit and the income to support the mortgage. So if you know someone, a friend, a family member, it could be anybody really, who is able to help you qualify, you could show more income on paper right now. You wouldn't have to get a new job, you wouldn't have to get a raise, you wouldn't have to wait a year or 2 years. You could just add on that co-signer to the loan, and as long as you qualified with them, boom, you got the house. Number six is go from 1099 employment to W-2 employment. I just touched on 1099 a little bit earlier, but 1099 employment can be difficult to qualify with, especially if you haven't been working 1099 for 2 years, or if you had claimed not enough of that income on your taxes to qualify. the cool thing about W-2 employment is that it can be taken at face value. So as soon as you get a W-2 job, the underwriter can usually use that income based on whatever it may be, an hourly wage, a salary, as long as it's not commission and it doesn't fluctuate to the degree where there could be nothing one month and something another month, that kind of employment, service job, something like that in a restaurant. You're going to be okay. You're going to be able to qualify using that W-2 income as long as you have 2 years of income history. So this wouldn't work if you just got a job as a 1099 employee with no income history whatsoever, and then you go get a W-2 job. It's not going to work. You still have to be working for 2 years. But if you've been working 1099 for 2 years and that income is not enough to qualify for you in your home, then you can go and get that W-2 job, get a couple of pay stubs, present those to your lender, and boom, you're in. And one thing I would suggest with that is talk to your lender first and see if they'll run the numbers and tell you how much you need to make to qualify for the purchase price that you want. Now, not all lenders are going to be able to do this or going to be willing to do this for you. And they mostly would be able, maybe not willing, because you'll run across lenders that if you don't qualify today, that's it. They just send you on your way and they tell you, sorry, you don't qualify. Now, I personally don't operate that way. If my client doesn't qualify today, we are together until they. Number 7. Now, this one is creative and it is not for everyone. Let me say that very clearly. However, it is a really cool way that you can use if it's appropriate for you. So I just want to preface with that. So number 7 is transfer your personal debt to your business credit. Now, this is not for everyone. First of all, you have to have a business and you have to have business credit to be able to do this. Second of all, this is not something you should do if you aren't able to afford to do it. However, this video is about showing more money on paper, so this is up to you guys and being financially responsible if you're going to do this or not. Okay, so I will explain it fully and then you can decide whether or not it's for you. But yes, you can transfer your personal debt to business credit, and at that point it no longer shows up on your personal credit report and will not be factored into your debt to income ratio. So if you are a business person or an entrepreneur who's taken on a lot of debts in your own name, which many business people do, this could be affecting your debt to income ratio. So this is a hack for you to be able to move those debts over to where they really should be onto your business so that they're not affecting your personal liabilities. When you should not use this strategy is when you actually can't afford it. So if you don't have the cash flow to pay those business debts back once you move your personal debts over, and then you buy a house and now you have a mortgage payment and you have all those other payments, don't do that. That's not what we're talking about here. This is for people who are operating a business and have just maxed out their personal debt to income ratio but can afford to pay for all the cards and the debts and the house as well. Number 8, look into buying down your interest rate. Maybe you don't qualify with your income with the rate that you were initially offered. Ask your lender about an interest rate buy down. I have other videos all about how do you buy down your interest rate, what is an interest rate buy down. Really quickly, just in case you don't know, an interest rate buy down is when you pay a lump sum of money to get a lower interest rate. That interest rate is yours forever. So it's essentially just a payment to buy the rate down, lower. And when you do that, obviously it decreases the monthly payment on the mortgage and maybe will help you qualify if you did it before. Now, this is something that your lender will have to run numbers on and you'll have to be financially prepared to take on, but it is an idea to help you get a little more of a purchase price or get you qualified in general. Number 9 is ask about an FHA loan. Now, your lender may not have talked to you about FHA loans or conventional loans and the difference in what we call debt to income ratio, but it is a big difference. It is about a 12% difference to be exact. So when you qualify for a conventional loan, what we call debt to income ratio has to be at 45%, usually max. On an FHA loan, you can go up to 57% debt to income ratio, which is a big difference. So if you were trying to qualify for a conventional loan, and you didn't make enough income, you may very well still qualify for an FHA loan. Number 10 is to accept ongoing income of other types besides just employment. Most people don't realize that they can do this either, or that they can use these types of incomes to qualify for a mortgage. But you can in fact use Social Security income, military income, annuities, dividends, and pensions to qualify for a mortgage. You can also use retirement income. So if you have income coming in, it's not from a job, make sure that you ask your lender if you can include that, because that may very well be the way that you can qualify. Guys, I saved the best for last because number 11 is my absolute favorite way to show more income to qualify for a home. Now, this is something, once again, that most people don't know you can do, but you absolutely can. When you are buying your primary residence, you can buy up to a 4-unit property. You could buy a duplex, a triplex, or a fourplex as your primary residence. And get this, guys, you can use the future rent income to qualify right now. Yes, that is correct. You can use the future rent that you would make on that property to qualify for that property. So let's say that I'm not making enough to qualify for a fourplex, but when the appraiser goes out and appraises that fourplex, they decide that each unit is going to bring in $2,000 a month. So there's my unit that I live in, and then there's 3 more units that are each going to make $2,000 a month. 2, 4, 6,000. Let's say that the mortgage is $4,000. Okay, $4,000 mortgage. I didn't qualify for it before. Now that I have $6,000 extra dollars in rental income coming in, I now qualify for that mortgage. And guess what, guys? $1,000, $6,000, you're profiting $2,000 a month off of your primary residence. That's unheard of. Well, it's not unheard of, but to the average consumer, it's just generally not known. And I feel like personally, if I had been told about this years ago, I would have absolutely taken advantage of it. So I really hope that you'll consider number 11, even if you qualify for a mortgage. Consider number 11. And instead of having your home as a debt, have your home as an asset right off the bat. Cash flowing asset. There you go, guys. 11 ways that you can show more income on paper right now to qualify for a mortgage and to buy the home that you want. I hope you guys have found this helpful. If you have any questions about this or anything else related to mortgages or lending, I'm here to help. Make sure to like and subscribe so you don't miss more content. Thanks for watching, and I'll see you in the next video.